Good evening. I'm Dan Fitzpatrick at Stock Market Mentor on Monday, February 6th. And in this video, we're going to look at Sohu, which really took it in the shorts, by the shorts, I guess. Down about 10 bucks, bad earnings. Nobody liked their numbers. Look at the volume. I mean, this was just one big puke fest here where everybody, seemed like everybody who owned the stock sold it like 8 different times. Volume was off the charts. So is it too late to sell? Yeah. Here's the thing. Look at how this stock has behaved around the 50-day moving average. You know, kind of a big, churn and burn right around here. Fine. But after the stock fell out of this consolidation and began moving lower like in a hurry, 50-day moving average was where the bears lived. Every single time the stock rallied up to that point, you could even say here and back here, every time the stock rallied to that point, that was selling. That is a sell the strength type of trade that we've been seeing in so many stocks. You know, buy any type of weakness and but sell strength right away. You know, and that's what happens when counter trend traders really control a stock to the downside. They take profits quickly. Once a stock breaks that 50-day moving average decisively, like we've seen here, doesn't look like much, but this was actually kind of a high volume move here. Once a stock breaks that range decisively, what you have to do is look at that same source of resistance where the stock had been sold at. Now you have to look at it and say, well, maybe this is where buyers are coming in. And that is what we see here today with Sohu. Stock fell as low as 52.17. Let's call it 52 bucks. So we've got support at $52. And by the way, I mentioned this for this reason. A lot of times I tell you to put in a stop below the support level and you say, oh, 52.17. So, you may want to put a stop in at 52.10. Well, that's not going to work for you too well because maybe there are a lot of folks that are waiting to buy the stock down at 52. So folks that put their stops in a little bit above that level, stop gets triggered, stock drops down a little bit more, triggers all those buy orders, bam, the stock moves up higher without you. So what you want to do on these stops is you just want to look at the even figure, which again wouldn't be 52.17, it'd be 52. And then place some kind of a control stop down a little bit below there. I would say even like really tight because this is a falling knife that looks like maybe it found a butcher block. But I'd say put it in at 51.90. You're risking what? 27 cents off of the low here, off of the low. So use that as a way to trade this stock. But I think when you look at this, you see the 50-day moving average starting to move higher. I think this is going to turn out to be a pretty advantageous buying opportunity, particularly when you look at Baidu. Didn't really react too much, but you can see it's based and is starting to move higher. Sina, above the 50-day moving average, pulled back in sympathy with this, but there's no threat to this new uptrend here. In fact, it'd be nice to see a little bit more of a pullback. Okay, NetEase, still trading sideways. What was it, down 3% today? Okay, fine, but it's still in the trading range. So then when we get back to Sohu, you can see this was the thing that really just absolutely got crushed today. As long as the stock stays above this new support level right here, this is a stock that you can be comfortable owning. But I'll say that again, as long as it stays above this level. That's different than me saying this is a stock that you can be comfortable owning, period. That's not what we do here at all at Stock Market Mentor. We define our risk. Don't be a trader. Be a risk manager. Manage your risk. You can buy this stock. Guess what? If you buy it now, you definitely didn't buy it at the high. We know that because the stock was up at 65. Now it's down at 53. What you want to do is say, well, maybe I can get it close to the low here. As long as I define my risk, I can make that trade. And it's kind of a no fuss, no muss trade. Just not a lot of risk in this trade because this is the trade that you're playing. And if you don't get this second half and instead get this, the only thing you have to participate in is this little tiny adverse move here. let the other guy take the rest of the loss. So anyway, that's it here, members. I got to talk about one sector that is poised to break out like big time, huge. So I want you to, I'm not going to tell you what it is. I need you to go check out the strategy session. Okay, I'll see you over there.